Unfortunately, one of the realities of business and investing is the occasional financial scandals and frauds that emerge. Investors should always be aware that there are unethical companies and people around, and that financial scandals can result in investments becoming worthless very quickly. The financial scandals that we are going to show in this video are amongst the biggest in history, and illustrate some of the ways unscrupulous people can defraud investors to enrich themselves. Number 1. Enron. The CEO, Jeff Skilling, and the CFO, Andrew Fastow, used an array of dubious accounting practices to inflate revenue and hide debts. Most of the fraud was committed between 1998 and 2001, resulting in the stock price trading as high as $90.56. During this period, CEO Ken Lay gave Skilling more and more authority, which Skilling used to manipulate the company's accounts. The company was able to exaggerate asset values and revenue by changing an accounting policy to use market-to-market prices. Billions of dollars in debt were also moved from the balance sheet and hidden in shell companies in the Cayman Islands. The fraud accelerated when Skilling took over the CEO position from Lay. In 2001, the fraud became unsustainable and the company collapsed. Ken Lay, Jeff Skilling, Andrew Fastow, and others were arrested. Arthur Andersen's role in the fraud remains one of the biggest accounting scandals in the United States to date. Number 2. WorldCom. When the industry later came under pressure, WorldCom executives turned to cooking the books. Investors believed the stock was still a good investment, and so at its peak the company was valued at $180 billion. When auditors discovered that revenues and profits had been overstated by as much as $7 billion, the stock price quickly collapsed from $60 to $1, and thousands of employees lost their jobs. The company filed for bankruptcy protection and later emerged as MCI, a much smaller restructured company. MCI was later bought by Verizon Communications. The WorldCom scandal remains one of the world's largest corporate scandals and resulted in nearly $180 billion in losses for investors and thousands of lost jobs. Number 3. Mississippi Bubble. It was also one of the strangest stories in the history of finance, involving an eccentric Scottish economist, the French economy, and one of the first banks to issue paper currency. France's economy was crippled by debt, and Lowe was given the authority to try to fix it. Another was setting up a new bank that issued paper currency, still a novelty at the time. Lowe was allowed to issue 50,000 shares, but investors only needed to put down a deposit equal to 15% of the share price. Investors flocked to buy shares, and Lowe was able to issue another 300,000 shares. Lowe raised so much money that he was able to lend the French government enough money to pay off the national debt. The problem was that so much cash was required for investors to buy the shares that Lowe's bank had to print more money. When Lowe realized that both the currency and the share price were inflated, he tried to devalue both in a controlled manner. Number 4. Charles Ponzi's Ponzi scheme. But it's worth mentioning because it was such a big story at the time that certain types of pyramid schemes are now known as Ponzi schemes. In 1919, Ponzi came up with a plan to trade international reply coupons IRCs. He raised money from investors, promising a 100% return within 90 days. The scheme quickly gained traction, and he was easily able to raise more capital. But Ponzi found that he could easily pay the promised returns to investors from new investors, and that most reinvested the money in the scheme anyway. In fact, he had so much money flowing into the scheme that he could live an extravagant lifestyle. They are similar in that both pay returns to investors using capital from new investors, and both are unsustainable. The difference is that a Ponzi scheme has one central operator recruiting investors, while a pyramid scheme encourages each investor to recruit new investors. Number 5. Bernie Madoff. In 2008, Bernie Madoff's hedge fund empire was exposed to be another Wall Street fraud, and the largest Ponzi scheme in history. Madoff posted impressive but fictitious returns for his hedge funds. Very few investors ever withdraw their money, so he was able to maintain the illusion for a very long time. Madoff started out with a legitimate business, and it's not quite clear when it actually became a Ponzi scheme. Some believe the fraud began in the 1980s, which would mean he kept the scheme going for as much as 20 years. Red flags were also raised by investment advisors and traders long before the fund collapsed, but the SEC ignored their warnings. It also appears that some investors knew the returns were too good to be true, but allowed greed to cloud their judgment. Number 6. 2008 Global Financial Crisis. The GFC of 2008 is typically regarded as an economic crisis and not counted amongst financial scandals. For a start, rating agencies were paid by issuers to give very risky securities investment-grade credit ratings. This presented a conflict of interest as rating agencies had a financial incentive to overlook the true risk a security carried. Banks sold securities to investors that they knew to be incredibly risky. In some cases, banks were short-selling the same securities they were promoting to fund managers. Banks also created synthetic products to help hedge funds bet against the mortgage market. One of the factors that contributed to the demise of the bank was a very dubious method of valuing repurchase agreements on its balance sheet. All of these companies with ethical issues contributed to the crisis, which as we know resulted in a major stock market crash and recession. Number 7. Wirecard. The recently uncovered fraud at Wirecard has turned out to be one of Europe's biggest financial scandals. Wirecard was a company that processed payments on behalf of merchants. In certain countries, Wirecard used subsidiary companies to process these payments on its behalf. At some point, the company began reporting fictitious revenue from these subsidiaries, which eventually accounted for the bulk of Wirecard's profits. When the media and several whistleblowers alleged the revenue did not exist, Wirecard accused them of trying to manipulate the share price for short sellers. They even sued the Financial Times, which resulted in German regulators investigating the journalists rather than the company. Company management will often accuse short sellers and hedge funds of trying to manipulate the share price. In many cases, regulators end up siding with the company, fearing the effects financial scandals might have on investor confidence. This makes it one of Germany's and Europe's biggest financial fraud cases. Number 8. 1MDB. The story of One Malaysia Development Berhad 1MDB involves Malaysia's Prime Minister at the time, Goldman Sachs, and a blockbuster movie starring Leonardo DiCaprio. Joe Low, a young financier who masterminded the fraud, is now an international fugitive. In 2009, Malaysia's Prime Minister Najib Razak launched 1MDB as a strategic development company, which was owned by the Malaysian government. Amongst the investments was the company that produced the hit movie Wolf of Wall Street. In 2012 and 2013, Goldman Sachs helped 1MDB raise $6.5 billion by selling bonds. Investigations are still ongoing, but it is clear that billions have disappeared and were used to buy jewelry and a super yacht, and to fund the lavish lifestyle of Joe Low. The key players in the saga have all claimed they are innocent and continue to blame one another. However, Goldman Sachs agreed to a $3.9 billion settlement with the Malaysian government for its role in the fraud. Number 9. Harshad Mehta Scam. The Harshad Mehta scam alone brought down the entire stock market. Done on a huge scale, this security scam was all about government bonds, loopholes in the financial system, and manipulation of the market. An authenticated stockbroker of the Bombay Stock Exchange, Harshad Mehta utilized the concept of ready-forward deals where the government issues securities for big projects. While the government raises finances from investors, it also has interest charged on the same. These short-term loans of 15 days involve securities being transferred to one bank from another by the way of bank receipts, and then brought back by the lending bank at a higher rate. Mehta acted as a broker between the lending and the borrowing banks, misappropriating funds to invest them in the stock market and utilizing them for his gain. Number 10. Bofors Scam. A deal worth $1.4 billion was signed between Indian National Congress and AB Bofors, a Swedish company that supplied arms and ammunition to the Indian Army. An announcement made by the Swedish national radio put then Prime Minister Rajiv Gandhi in the limelight. It was alleged by the Swedish company that $40 million had been paid to middlemen towards the success of the deal. A report by Sweden's National Audit Bureau affirmed this allegation along with the presence of undue influence. although it was denied by the Rajiv Gandhi government. The Swedish audit report was followed by a report by the Hindu exposing the scam through the bank accounts related to the deal. Since Bofors was not budging, it was decided that unless the information is retrieved, the contract would be cancelled and the company would be blacklisted. Bofors decided to send a delegate to deal with the matter when the Rajiv Gandhi government abruptly stopped the investigation. No matter how much fundamental research you conduct to assist in stock selection, you could occasionally nonetheless find yourself invested in a company at the center of a financial scandal. Business scandals may raise red signals, but they can also appear out of nowhere. The best thing you can do is to appropriately manage portfolio risk in addition to keeping an eye out for warning indicators. The best way to accomplish this is through a diversified asset allocation across numerous investments and asset classes. Thanks for watching. So what are your thoughts on this horrendous financial crimes? Sound off in the comments section below. Be sure to hit that subscribe button so we can keep you up to date with the latest in crimes of the century.